Welcome back to Investing Talk Podcast. Today we're pulling back the curtain on JD.com, one of China's e-commerce giants, as it prepares to unveil its Q2 2025 earnings. This isn't just about headline numbers, it's a critical moment that could really reveal the resilience of the Chinese consumer and maybe illuminate the competitive landscape shaping online retail's future. Our mission today is to sift through analyst expectations, past performance puzzles, and the broader economic currents to give you the clearest, most insightful picture possible of what to watch.
Exactly. Whether you're a long-term investor with positions in Chinese tech, or perhaps a short-term trader looking for, volatility, or even if you're just trying to understand the pulse of that vast Chinese consumer market, this look is crafted specifically for you. We'll connect the dots and highlight the key metrics that truly matter beyond the surface.
Before we get into the specifics, just a quick note. If you find these insights valuable and want more of this kind of content, please take a moment to subscribe, hit that like button, and leave a comment. It truly helps us reach more listeners like you. And if there's a specific company's earnings or financial situation you'd like us to explore in a future analysis, just drop a comment below. You can also consider buying us a coffee to support the show and keep these analyses coming. All right, let's unpack this. So first off, let's talk about the critical dates and the initial expectations that analysts are setting. When exactly is this report dropping, and what are the initial numbers we should be looking at?
Okay, JD.com is set to report its Q2 2025 earnings on August 14th, 2025. That's a date many are circling on their calendars, especially since it's before the U.S. market opens. The accompanying conference call is scheduled for 8:20 a.m. Eastern Time, which for those in Asia translates to 8:00 p.m. Beijing or Hong Kong time. So it's definitely a primetime event for many global investors.
Right. And what's the early word from analysts regarding revenue and earnings per share, or EPS? Is there a tight consensus, or are we seeing a bit of a spread in expectations?
Well, on the revenue front, a broad, firm consensus isn't widely published yet for Q2 2025, which itself kind of indicates some uncertainty, right? But just for a historical reference point, their Q2 2023 revenue was 287.93 billion RMB. Now, when it comes to earnings per share, the consensus estimates are quite varied. They're ranging from around 50 cents up to 77 cents. Zacks, for instance, is at the higher end with only 77 cents, while CoinCodex is closer to that 50-cent mark.
50 cents to 77 cents.
Yeah, and this isn't just a range. It already reflects a notable year-over-year decrease from prior periods. But crucially, the spread between the high and low estimates, that's nearly 50%. It's quite wide for a company of JD.com's stature. This variability signals significant uncertainty among analysts, making the actual reported numbers all the more impactful. Even a slight deviation could trigger a strong market reaction depending on which end of that spectrum the results land.
That is a huge spread, suggesting a lot of questions out there. Is there a whisper number floating around? That unofficial expectation that sometimes gives us an early peek or hints at a potential surprise.
Not really, not widely reported for JD.com as of August 7th. Given the muted expectations already reflected in that rather wide consensus range we just discussed, any unofficial whisper number would likely be very close to that range anyway. So no big surprises are being hinted at in the informal channels, which itself tells us something about the general sentiment, a lack of strong conviction either way leading into the report.
Okay, and what about the company's own guidance? What have JD.com's management told us previously that might set expectations or perhaps temper them for this quarter?
Management has consistently pointed to what they term challenging macroeconomic conditions in China. This isn't unique to them, obviously. It's a theme across many sectors there. However, they've also expressed confidence in maintaining resilience in their gross merchandise volume, or GMV, that's the total value of goods sold over their platform, and achieving positive operating margins for 2025. What's notable, though, is that they haven't reiterated specific revenue or EPS guidance for this particular Q2 quarter during their last earnings call. So we're largely relying on those analyst estimates we just talked about without a clear, recent quantitative target from the company itself.
Right, that makes sense. Looking back at recent history can sometimes give us clues, or at least a sense of how the company tends to perform against the experts' predictions. How has JD.com performed against those expectations in the past? Have they been consistently beating, missing, or just, in line?
Well, if we look at their last 4 quarters, they've shown a fairly consistent pattern of beating EPS estimates, particularly on the bottom line. In Q1 2025, for example, they reported an EPS of $1.16 against an estimate of $1.05. That was a beat of 11 cents. In fact, they've beaten EPS estimates in 3 of the last 4 quarters, with one very close near miss. So they do have a track record of topping those profit numbers, which, would typically be seen as a bullish sign.
Okay, but this next point is truly fascinating to me because it challenges conventional wisdom. We might expect a beat to always mean a jump in stock price, but what's JD.com's track record here? How do shares typically react immediately after these earnings reports, especially after those beats you mentioned?
Yeah, that's where it gets really interesting and a bit counterintuitive, especially for newer investors. Despite their track record of EPS beats, recent history shows that JD.com's shares typically exhibit muted or even slightly negative reactions immediately after these earnings reports.
Really, even with a beat.
Yeah. This often happens in a bear or cautious market where investors are, frankly, less concerned with a slight EPS beat and maybe more focused on top-line growth and those broader macro indicators. For JD.com, it suggests the market is prioritizing the overall health of the Chinese consumer and the broader economic recovery over maybe just individual company performance. It's like viewing an EPS beat as doing less badly rather than true outperformance. We've often seen initial moves in after-hours trading tend to be partially retraced within about a week. So no, a beat doesn't necessarily guarantee a sustained positive move. That's a crucial point for short-term traders to keep in mind.
That's a huge takeaway. Wow. So a good earnings report doesn't always translate into a clear win for the stock price. It really makes you think about what the market is truly valuing right now. If the headline numbers aren't telling the full story, what are the underlying trends in key metrics like active users or profit margins telling us? What about the fundamental health of the business?
Well, what's truly fascinating here is that their active user counts have remained relatively stable or even shown slight growth. This suggests they're largely holding on to their substantial customer base, which is incredibly important in such a fiercely competitive market, where rivals are constantly trying to poach users. However, margins are under modest compression. This is due to a couple of factors. Cost inflation, which impacts their operational expenses, and ongoing logistics investments. JD.com prides itself on its robust proprietary logistics network, and investing in that infrastructure, while definitely a long-term strategic advantage, comes with a short-term price tag.
Right, the investment costs.
Exactly. Meanwhile, GMV growth, that total sales value, has been subdued, reflecting the broader cautious consumer sentiment in China we talked about. So while they might be beating on EPS, it's not necessarily driven by booming top-line growth or expanding margins, but perhaps more by disciplined cost control and operational efficiency.
Okay, so efficiency is key. Beyond the numbers we've discussed, what significant news or broader trends have impacted JD.com during this past quarter? Have there been any major product launches, strategic shifts, or maybe even new regulatory developments that could sway investor sentiment?
Not really on the immediate headline-grabbing product launch front, no. JD.com has been focusing heavily on expanding its supply chain platform and integrating AI-powered logistics. This isn't just about operational efficiency, though. It's a long-term strategic play to build a pretty formidable competitive moat. If they're successful, this AI integration could drastically reduce their fulfillment costs per order, which is a massive differentiator in the low-margin e-commerce game, and potentially free up capital for further expansion or shareholder returns down the line.
That AI integration sounds critical, then.
It really is. They've also reported continued efficiency initiatives in logistics and delivery, which is crucial for a giant like them to manage costs. Now, regarding regulation, while there haven't been new headline regulatory crackdowns specifically targeting JD.com this quarter, the broader shadow of past tech sector reforms, particularly around data privacy, platform exclusivity, and antitrust, continues to subtly influence investor sentiment towards Chinese tech. This means even good results can be tempered by lingering concerns about potential future policy shifts. It's just a constant backdrop for these giants.
Yeah, that makes sense, that lingering uncertainty. So if we take a step back, what's the bigger picture here? How do sector-wide and macroeconomic trends play into this? Is the overall environment helping or hindering them, and how does JD.com fit into that?
This raises an important question. The Chinese consumer spending environment remains noticeably soft. Think of it like this. If you're feeling uncertain about your job or the broader economy, you're probably less likely to splurge on a new high-end gadget online, right? More likely to stick to essentials. That behavior directly impacts platforms like JD.com, irrespective of their internal efficiencies. We're seeing ongoing weakness in the property sector and exports, which naturally impacts retail sales across the board.
And the competition.
Oh yeah, add to that the persistent competitive pressures from rivals like Alibaba and Pinduoduo, who are constantly vying for market share with aggressive pricing and new features. While JD.com has benefited somewhat from favorable cost of goods due to easing input prices in some areas, the overall e-commerce sector in China simply lacks significant growth tailwinds right now. It's a truly tough operating environment, making organic growth a serious challenge.
Tough environments indeed. And how are analysts reacting to all this? Have we seen any recent upgrades or downgrades that might give us a clue about the professional sentiment leading into earnings, beyond just those consensus numbers?
Well, multiple brokerages have maintained hold or neutral ratings on JD.com, which indicates a lack of strong conviction for an immediate breakout. A few have modestly reduced their price targets, citing slower top-line growth as their primary concern rather than the profitability they've shown. In the fortnight leading up to earnings, there haven't been any significant upgrades or downgrades. This suggests a relatively stable, though undeniably cautious, consensus view from the analyst community. They seem to be waiting for the report to confirm or contradict their existing hypotheses, rather than making bold calls right now.
Okay, waiting game for the analysts too. Let's shift gears slightly to the stock's recent price action. How has JD.com traded leading up to this report, and what does the options market tell us about potential moves? Are traders anticipating a big swing or relatively quiet action?
The shares have mostly traded sideways, maybe with a slight downward drift in the 2 weeks before earnings. This reflects a sense of risk aversion and a generally neutral to bearish sentiment among investors. People aren't really rushing in or out, but there's a gentle pressure downwards, you could say.
Got it. What are the key price levels investors should be watching on the charts? Where are the potential support and resistance zones that could dictate immediate post-earnings movement?
For immediate support, definitely keep a very close eye on the $24.50 to $25 zone. This represents recent closing lows, a decisive break below that could signal further downside momentum, potentially triggering more selling. On the resistance side, the $28 to $29 range is pretty significant. It includes prior post-earnings highs and some technical resistance levels. A move and sustained close above this range would signal a meaningful shift in positive momentum.
Okay, 24.50 support, 28 resistance. And what is the options market pricing in for the earnings event itself? How much of a swing are traders expecting JD.com's stock to make right after the report? This usually gives a good sense of anticipated volatility.
Yeah, it does. Based on the elevated pre-report implied volatility, which basically tells us how much the market expects the stock price to swing after a major event, like earnings options traders are currently pricing in a significant potential plus or minus 7 to 8% move for JD.com stock after the report.
7 to 8%. Wow.
Yeah, that's a pretty substantial potential swing. It indicates that options traders are anticipating a material reaction, even if, as we discussed earlier, it might be short-lived or eventually retraced. It signifies a lot of uncertainty baked in.
Okay, so given all this information, the consensus numbers, the historical reactions, those macroeconomic headwinds, the technical setup, what would a bullish scenario look like for JD.com? Something that could surprise the market positively. And conversely, what would signal a definitively bearish outcome?
Right. A truly bullish case for JD.com would need to involve more than just a simple EPS beat. We'd really need to see a strong GMV rebound, indicating a real acceleration in consumer spending maybe, or a significant acceleration in active user growth, signaling market share gains. We'd also look for a positive surprise in margins or operating income, perhaps driven by that better-than-expected logistics efficiency, proving their investments are truly paying off. And crucially, management reinstating or raising quantitative revenue growth guidance. That would be a strong bullish signal. It would indicate renewed confidence in the China retail recovery, and that's something the market is desperately waiting for.
That makes sense, a clear signal on growth. And what about the downside? What would make this report unequivocally bearish for JD.com, confirming those cautious sentiments we've been talking about?
Well, a bearish scenario would obviously be a material revenue or EPS miss that's significantly worse than the already low expectations. That would show a deeper struggle than anticipated. Guidance pointing to ongoing or even increased margin pressure or accelerating negative user trends would also be deeply concerning. That hits at the core health and future viability of their business. And, any management commentary highlighting persistent macroeconomic headwinds, significant competitive losses, especially to rivals like Pinduoduo, or even signs of further cost escalation or, heaven forbid, new regulatory risks, That would almost certainly send the stock lower, as investors will be forced to reevaluate the company's long-term prospects.
So if you had to pick the single most important metric for you to watch in this report, the one number that tells you the most about JD.com's health and future right now, what would it be?
For me, the absolute key metric to watch this time around is active customer accounts or user growth. While GMV and margins are crucial, of course, consistent growth or even just stability in their active user base is a leading indicator of market share stability and future revenue potential. In a competitive and somewhat stagnant market like China's e-commerce is right now, user acquisition and retention speak volumes about their long-term viability and ability to fend off rivals. It really tells us whether their fundamental appeal to consumers is holding up under pressure.
User growth. Okay, so if you had to give an overall lean, what's your take on JD.com going into these earnings? Are you feeling more optimistic, pessimistic, or sort of somewhere in the middle given everything we've discussed?
Yeah, overall I'd lean neutral to bearish. My confidence score for a notable positive surprise, one that would truly shift sentiment, is probably only about a 4 out of 10. The weak consumer environment in China and the generally cautious sector commentary really limit the probability of a significant positive surprise, in my view. Plus, global factors like ongoing trade tensions, persistent supply chain issues, and the broader macroeconomic data coming out of China also offer very little support right now. It's just a tough environment to outperform expectations significantly. And the market's current focus seems less on small EPS beats and more on clear signs of top-line recovery and macro stability, which are, frankly, largely out of JD.com's direct control.
A 4 out of 10. Okay, so what does this all mean for potential trading strategies, especially with that significant implied volatility you mentioned? How should listeners maybe approach this report?
Well, for risk-averse investors, it's probably best to avoid holding shares through the earnings print, unless you're a really long-term investor with high conviction in the company's multi-year outlook, someone willing to ride out these short-term fluctuations. The high implied volatility does make naked option strategies quite risky. Premium decay or IV crush after the report can be significant, eroding profits quickly even if you get the direction right. If you're more risk tolerant, you could consider a short-term options strangle or straddle to maybe capitalize on that potential volatility. But again, you have to be very wary of that implied volatility crush wiping out gains.
Right, that IV crush is tricky.
It really is. For those looking for more of a directional bias, I'd strongly recommend waiting for confirmation of a trend after the earnings reaction before initiating any new positions. Given the current technical and fundamental uncertainty, patience here is likely to be a virtue. Don't rush into it based on the initial pop or drop.
That's a lot to consider as JD.com approaches its earnings report. It really shows how many layers there are to understanding a company's performance, extending far beyond just the headline numbers, and how quickly market sentiment can shift based on both internal performance and those broader economic currents.
Indeed. And if we connect this to the bigger picture, it really raises an important question for all of us watching the global economy. What does JD.com's performance ultimately tell us about the broader health and future trajectory of the Chinese consumer market itself? Is it maybe a bellwether for a broader recovery, or does it signal prolonged challenges ahead for one of the world's most critical consumer bases?
A fascinating thought to leave you with as we await the numbers. Thank you for joining us for this analysis of JD.com's upcoming earnings. We hope you feel more informed and ready to make sense of what's to come.